So Josh is somebody who's a Wall Street veteran, money manager, contributor on CNBC, and extremely knowledgeable when it comes to stocks, and has been at InvestFest, has been on Market Mondays in the past. So, yes, and has his own festival as well. So we'll talk about a variety of different things. But first, I want to start with chip stocks. So we talked about chip stocks early on in the show. AMD, Nvidia, all of these different stocks that, a lot of people say they call for a chip bubble last year. They said that it was artificial intelligence was overrated. It was hyped up. But we're still seeing gains going into 2025, and people are still optimistic. ASML up big this year, up big so far this year. So what is your take on chip stocks?
Well, they're a really big part of the market now. These are some of the largest publicly traded companies by market cap. So for your viewers who are broadly invested in stocks, whether they're in mutual funds or ETFs, if they have any kind of growth weightings in those ETFs or any kind of tech weightings, they have tons of exposure to these stocks one way or the other. And then, of course, they're very popular trading stocks. So a lot of people own them on their own. I think a couple of things are worth being said here. People could be right about the long term of AI and how important it becomes to the economy and society and the world. But that doesn't mean the companies that are at the forefront of AI technology are going to have share prices that go up every day. It's just if it were that easy, then anybody could be a professional money manager. Just AI, I'll just buy all the chip stocks. So I think there'll be rallies. And I think there'll be sell-offs just like last year. People forget there was a moment in August and September last year where NVIDIA was in a 24% drawdown from its high.
Yep.
Mm-hmm.
It didn't last long, but let's not act like it didn't happen. That certainly could happen this year. And if you're in that stock for as long as I've been, which 2015, so if you're in the stock as long as I've been, you've sat through 30% declines on a fairly regular basis. And it's not that NVIDIA is not everything they say it is. It is the leader. It is the best company in the market. Last year, I think the full year return was like 178%. That's incredible when you consider that it's a multi-trillion-dollar company. So I'm a bull. I will tell you, one of the big landmines for this coming year that I'm thinking about is the possibility that at some point, hasn't happened in a while, at some point they have an earnings report where people get nervous that we've seen the best that you could possibly see. They're going to report on February either 25th or 26th. The 25th is my birthday. So let's hope if it's a disappointment, it's not on February 25th. But this is a really big report. This is what Wall Street is focused on. NVIDIA is not only an important weighting in all these indices, the earnings growth coming from NVIDIA is a large portion of the overall S&P 500's earnings growth that we expect for this year. So we need this company to continue to perform. Yeah. There's a phenomenon, though, on the street that, and this is actually universally important, guys. There's no such thing as good news or bad news. There's no good or bad on Wall Street. There's only better than expected or worse than expected.
Worse. Yep.
So there's a scenario where NVIDIA grows 40-50% in earnings this year, but the street wanted 50-60%, and that's not good enough, and you get a huge sell-off in the stock. It doesn't mean anything's wrong with the company, because all this is an expectations game. And what's different about this game versus betting on sports, if you watch the Detroit Lions Minnesota Vikings game last night, with sports, you know what the odds are. The market, they don't tell you the odds. So we know that there are expectations embedded for NVIDIA to have a great report. We sort of have a rough idea of what those expectations are in the form of an earnings estimate from the consensus of Wall Street analysts who cover the stock, but we don't know where sentiment is. We don't know how badly people need that number to be materially higher. We can assume. So that's, to me, if you ask me, like, what are some of the biggest things coming up in the next couple of months that we really need to be focused on and then are going to have a big impact? Chip stocks in general, yes, but really it's the NVIDIA show, and all the other chip stocks are like the opening acts.
Yeah, I'm with you. I'm bull, and when it comes to the sector, for sure. It's interesting as we talk about NVIDIA, and we know, right? This is like the Super Bowl. Every quarter, it's the Super Bowl. Everybody's anticipating it. We sit and we watch. More people are waiting to read that report and hear from him speak more and more every quarter. I'm
sorry. Please go ahead.
I'll say, as that's happening, there's another sector that I think that we should be mindful of, and it revolves around the data center revolution that I like to call it, but it's an energy sector. What are your thoughts around energy, right? Because NVIDIA works because it has the AI capability, but that capability needs to be housed somewhere, right? And all these, when we see Constellation, when we see Microsoft putting large billion-dollar investments into energy, specifically nuclear, to power this, what are your thoughts around that sector in 25?
Look, I think that sector can continue to work, and the AI software providers and the AI cybersecurity providers, I think there are all of these kind of related trades that they're in bull markets right now. They can stay in bull markets so long as the demand to continue to spend holds up. So the thing to keep in mind with NVIDIA and with these energy needs that you're referencing, a lot of this is being held up by just a few companies doing almost all the spending. Now, they're doing that spending on behalf of millions of customers, but like Microsoft is the biggest buyer of NVIDIA chips. OpenAI might be second or third biggest, and they are virtually funded by Microsoft. Now, so you've got this situation where the hyperscalers and the cloud companies need more energy in order to keep up with the demand for all this complex compute power that's necessary for these apps that people are creating to work. So you saw last year, the number one performing stock in the S&P 500. Does anyone know it? Ian, do you know it?
Yeah, we know.
Not off the top of my head, nope.
Okay.
Palantir. But it got added.
Close.
It got added in December, but VST was the number one prior to that.
That's right. So that's an energy company.
Yep.
It's the first time since 2001 that we've had a utility as the number one performing S&P 500 stock. It would have been Palantir, but it wasn't in the index the whole year. That's right.
Yeah, it got added 23rd.
So Vistra is up on electricity demand from the hyperscalers. There's another really hot stock, EQT. This is a natural gas company, not a utility, but they are very strategically, it's coincidental, but they ended up very strategically placed in the Appalachian region, very close to where all of these hyperscaler cloud data centers are geographically located. And if you look at a chart of that stock, it's one of the biggest beasts in the market right now. So it's a really interesting trade. I think it can continue to work. But again, all of that rests on the willingness of like 7 companies to continue to plow CapEx dollars into this build out. So it's Microsoft, it's OpenAI, it's Alphabet, it's Amazon. We really need those companies to be willing to continue to underwrite this build out. And the reason they'll be willing to do that is continued usage by their customers, which is basically everyone. So now they also need an ROI. They have to make money from this. It's great to build, and it's great to have a forecast for demand that's 3 years from now. It's great to get ahead of that. But we've seen tech cycles before where they've temporarily overbuilt. And then all of a sudden, and this is my worry about this year, and then all of a sudden, the CFO says to the CEO, we don't really
that makes sense. Yeah.
We don't have the revenue to justify continuing this CapEx spend. We might want to pull back the reins. No one has done that yet. And when they talk to like Sundar Pichai from Alphabet, for him, this spending is as much defensive as it is offensive. They can't afford to let Perplexity and OpenAI and Meta Search continue to make inroads against their core search business. They have to spend. Can you say the same for Microsoft? And Microsoft's interesting. They sit literally at the center of all of this activity. Their stock price only went up 12% last year.
Mhm.
That is less than 1/3 of the performance of the NASDAQ, and it's less than half of the performance of the S&P 500. If that trend continues, at a certain point, somebody sitting at Microsoft says, maybe we're not really getting the payoff here to justify the amount of money that we keep plowing into this stuff. Let's slow down. And if that happens, NVIDIA will be the last to know. NVIDIA is the caboose. They're not driving the train. So they won't see the cliff coming. If you're sitting in the front of the train, if you're Microsoft or OpenAI, and you see there's a slowdown in demand or there's a lack of monetization, you're going to see it coming. NVIDIA will be the last. The last thing I want to say on this, though, and the really good news, is that while NVIDIA, Troy, you're right, NVIDIA's earnings are the Super Bowl every quarter. The good news is they report last.
Mhm.
So by the time we get to late February, we will have already gotten the Q4 earnings reports from Amazon, from Microsoft, from Apple. If there's any sort of slowdown apparent in the spending on this stuff, we'll know. And NVIDIA's share price will have already adjusted accordingly. So we're going to get some really great reads into all of this spending and whether or not there's a monetization in the next 4 weeks. We're gonna learn an awful lot.